Hello investors and traders, and welcome to the weekly market report with the market guys. I'm AJ Monty. Well, I'm very happy to report that the forecasts we put out last week on all the markets were 100% accurate. The technical signals followed through like a charm, and as I do each and every week, I leave my lines on the chart so that we can show with great evidence how accurate technical analysis is when used as a forecasting tool. Now, don't get me wrong, we use it as a forecasting tool, but we also use it as a risk management tool. And last week, if you remember, I pointed out some key support levels for the Dow especially, so that investors and traders alike could really set their stops and put a risk management plan together should January turn out to be a down month. There's an old saying, as January goes, so goes the year. And we are expecting a year-end rally, aka the Santa Claus rally. But at the end of that rally and into the first few days of January, we're going to have to keep a close eye on the price action to make sure we don't start turning lower. So this is the VIX. As I zoom in here, you'll see again the lines that I drew last week. I said we would most likely go lower, the end of the line being my target. We came within pennies of that. And interestingly enough, today, Friday, the last day in November, we are closing with a bearish engulfing pattern. Now, there's some mixed signals here that I'd like to point out for you. Not only do we have a bearish engulfing pattern, but on Thursday, it failed to get back up over this 20-period moving average. And you see that long shadow? That tells us that there's more selling pressure than buying pressure. So that's a bearish sign. Now, on the opposite side of the coin, you're going to see the stochastic registering a very low 6.53 on that scale, which is already telling us the VIX is oversold. So later next week, I do expect the VIX to start turning higher right here, which again would be bearish for the S&P. I don't want to get ahead of ourselves here, but we really have to pay close attention to the VIX because that is a leading indicator for the other markets. My forecast is this. I think we're going to continue lower on the VIX just like that, and then I believe we're going to start to see a bounce or a pivot point form on the VIX. So keep an eye on that. I'm forecasting the stochastics will eventually start to turn higher, which at this point will start to force the VIX higher and the S&P lower. So with that said, let's go to the SPY. I left my lines on the chart here as well. My forecast for the SPY and the Russell 2000 was set up to be a 2-week forecast. So you can see that we're halfway through this forecasted trend. We're seeing a long stretch of green here, and although I think we're going to go a little bit higher on the S&P, I think by the end of the week we'll start to pull back and test this line right here. So I'm going to leave that in place just like that as a 2-part forecast. Early in the week I think we'll go higher. Later in the week I think we'll start to see some profit taking. And then again later in the week I think we're going to see the stochastic start to drop below 80% on that scale. Right now it's showing overbought, but again the momentum is still continuing higher on the S&P, so we're going to let that run just a little bit more before we trail our stops and look to take any profits. Now if we go to the diamonds, ticker symbol DIA, boy, look at that, huh? It's almost hitting the target even though this is a 2-week forecast. We're almost at the end of that line for my target. The momentum is still continuing higher on the Dow, so I think Monday and Tuesday we're going to go up before starting to pull back just like that. Now, in the middle to late next week, I think we could see a severe pullback Thursday and Friday, and then we'll see whether or not we bounce and go into our Santa Claus rally or year-end rally. So there's going to be a lot of volatility here next week, and stay tuned. If you are an active trader or if you're an option trader, look to take some short-term profits as the markets more or less sort out the supply and demand argument there. So that's what we're looking at for the diamonds. If you look at the more broad-based index, which is the Russell 2000, again, my forecast is in place as a 2-week forecast. We have a bullish engulfing pattern. I think we're going to continue up. In fact, I'm going to modify this a little bit. Keep that uptrend in mind. I think we're going to go up just like that on the Russell 2000, and then we'll have to see whether or not it's going to pull back from resistance up here. This is a little bit of a blank spot. I don't normally do that, but this is going to be an area in question that we'll have to pay close attention to Wednesday and Thursday of next week. See, the stochastics is already showing overbought for the Russell 2000, and although I think we could go a little bit higher, eventually the stochastic is going to start pulling back. Now, last week, I ran out of time, did not forecast the Qs, but on our conference call with our subscribers, I did analyze the Qs earlier this week. Here's the chart from that. I drew a diagonal line and I reestablished this as a support level based on that little doji back there. So look at that. We bounced off of that. We rallied up. We have a long stretch of green candles known as a stale green light with a gap above the market. I think we're going to continue higher right here, just like that, and then we'll start to pull back after that gap is filled. So just like the diamonds and the S&P and the Russell 2000, early on I think we're going to see some upward pressure and then some profit taking as we set ourselves up for the last 2 weeks of the year, which is mid-December. We should expect some buying activity. Just a little known fact, 34 out of the last 45 years we've rallied in a year-end rally with an average increase in price of 1.4%. That's over, just a little over 75% of the time we rally in the last 2 weeks of the year. Now that might happen again and we might continue on with 76% of the time, but if it doesn't rally, all the more reason to manage risk and set our stops below the market. I would love it if you reviewed last week's market report once again so you can see how I talk about the market and the long-term trend. I do believe eventually the bull market will end. I think it will be followed by a bear market, but don't fear. We can make more money faster on the way down than on the way up, because once fear kicks in, prices drop 3 times faster than they go up, and that's money in the bank for us. So hope you're enjoying our reports each and every week. I hope you follow along with the market guys as well. Stay tuned. We're not going anywhere. We're going to just keep plugging along and helping the general public determine where the market's going based on technical analysis signals. So thanks again. Have a good weekend. Bye-bye.
This video segment is a small part of what the market guys offer through their educational products and services. If you are interested in any of our Trade Alert services, or you would like more information about our one-on-one mentoring program, simply contact us at info@themarketguys.com.